TV Live, welcome to today's recap. So it is Monday. We came in with a little present, right? The future's down 13 to 15 handles. You had a little adversity in Hong Kong. They were showing it all day long. And literally, I think within the first 30 minutes, the low of the day was put in. And then things kind of drifted higher. Some stocks acted better than others, like they always do. And some stocks just weren't even worth your time. So, with that being said, based on your time frame, based on how you go about your business, your day, you made some adjustments. On Friday, we closed relatively strong, reclaiming the 50-day. So I know a few of us were actually long with the hedge, thank goodness, into today. But they gave you ways out of it, and then some. So first, I want to give you, I want to just do the chart of the spiders and kind of create the chart with you and just show you my thought process, because as a trader, you have levels and you try and figure out in real time, how to maneuver. So let's go to the chart. So if you look at the chart, this is the chart of the SPX. So, there's lots of lines on here. You have the 8-day, you have the 21-day, you have the 50-day, you have the 100-day, and then there's the 200-day. So, if you just take a quick look, okay, I remember that March, April period, okay, or May, where you had this trend that was really tough, okay. You had this false breakout to the upside here that resolved lower, pushed the envelope, and then pushed below the range, came back in before finally, after quite a bit of time, right? What was the low put in February? This range you had here, which range trading is definitely difficult for active traders because we like to buy breakouts, and sell it, or we like to short breakdowns and not come the other way. But anyway, it took about 3 months. So finally, when this resolved higher in May, you had a nice trend that was followable for a decent amount of time until it broke below the 8 and 21-day right here. Okay, and then what'd you have this time? Okay, this corrective type of spot pulled in about almost 4% off the highs, held the 100-day, triggered above it, held higher, made new highs, and now this feels a little bit like the trend that we had back here. If you look at this, this kind of looks familiar to you right here, right? You had a breakout above. That was that unnatural breakout failure. Then, I know we came in that day and I was like, things just feel odd. Market kind of wanted to go lower into this area before they pushed us right back to highs. So here you have a doji top into the Bobadil, the Scotland vote, you name it. See what happens below 2006. And then right there was the day you pretty much had to reduce some risk across the board. If you did so, you didn't have to get worried about that, and then you were able to, trade some of this minutia. So let's just fast forward to where we are now, where, today you had a red dog reversal, okay? You want to know what a red dog reversal is? Okay, a red dog reversal is a tactic that you could use on all different time frames. Sometimes it's a major inflection point, okay? Sometimes it's just a tactical way to approach the day if you have risk down, or if you want to get out of some longs because you're not sure whether or not it's going to continue. And what it does is, it's almost like a counter psychology trade, to catch a move calculated. So real quick, let me just show you right here. Okay, so just say right here, okay, you were in the market, this descending channel right here, looking like it wanted to resolve one way or another, and wound up resolving to the upside. And here you had, everyone just say if you were short, okay, you said, oh, I'm not sure if I need to cover. You had this wide range bar. Same way if you were long, you were like, oh, now we're back above the 21-day, let me get longer. Showed commitment to it, continued. So now you have people rolling up shorts, and you have some people chasing. And then finally, if you were short against this high here of 2011 or 2012 on this push through, shorts probably covered, which created that extra move. And then if you were like, I'm not getting long here, I'm not getting long here, I'm not getting long here, you push through here, and you probably bought in the hood. Uh-oh, what now? Okay, and then this was if you were long, a spot to reduce some risk and then write down this previous low just in case this doji resolved lower. And if you were short or looking for a short signal, this was a short maybe versus the high, and then that happened. So let's talk about the psychology of just say today's red dog reversal. Okay, from here you are at 2019 down to last week's low of 1965. 1966. So those were the points you write down. Let's go to the spiders because that's what I talked about a lot today. Okay, so here, 190, what was it, 196.27? I'm off the top of my head, let's see, 196.27. Yeah, that was last week's low. Okay, and coming in today with the futures down the way they were, and all of this choppy mess, and everyone calling for a 15-20% correction, and showing all of the, the in the streets of Hong Kong. You didn't know, were we going to break below 196.27 and go to the 100-day? Were we going to break the 100-day and come all the way back down to retest maybe 194, or even the old August pivot, or maybe even the 200-day? At this point, nobody knew. Okay, when nobody knows what's happening next, you have price points that people trade against. So I know if you were long on Friday because things bounced back and we were down this morning, you probably said, ooh, if we break and close below 196.27, we could see the 100-day, we could see lower. And then shorts might say, oh, now's my time to press, kind of like last Thursday, or that Tuesday, whichever it was, where you opened down in the first 20 minutes and then we continued lower all day. That was different. That was that trend down day. You go back to the chart, that was this day. So this was still in the memory of people, right? This open, quick move lower and then boom. So that's why this is so important, because you really never know what's going to happen next. So when you push below 196.27, you have maybe some people get stopped out of longs, maybe people looking to add to their shorts, and then once you come back, above it, okay, what it does is it creates a pretty fast trade, because shorts that might have been like, oh my goodness, I just got short, and look at the size of the move I'm short against, and guys who got stopped out of longs say, oh, I got to get back in my long, or people who sold when they broke the 8 and 21 day right around 200 or here said, oh, now I can get involved, and it turns into a quick spot. So if you go, you'll see it on the 5-minute chart. Okay, this was that low, okay, where it pushed below it quickly, came back right above, okay, and if you missed this, you could have waited for, just say this even, when it showed you a little commitment to it, okay, it broke above the prior low, held above it, you could have bought it here, put a stop at the low of the day, and then even just played a tactical gap fill, which took about an hour and a half. Felt like it was all day long, but an hour and a half, spiders went from above 196.27 with the low of 196.05, 22-cent risk for a move that was about $1.25, besides everything else. Okay, with a nice little push up here, bull flag continuation, and then once it filled the gap, traders probably like, okay, I'm done now, let's see what happens next, and then it just became wishy-washy. But nice and calculated. Okay, could have pushed below this, it could have pushed below this 190, 196.27, hovered here, did not fill the gap, show the pressure there, show no demand, and then continued lower, but it didn't. Pushed back above it, hung above it, and filled the gap. Okay, and then turned lower here, which, then that was that for that trade. So anyway, that's basically what we've been talking about as far as red dog reversals. So if you want to go a little bit further on time frame analysis, if you've been in this trade real long, basically we're just not even near the big trend that we've tested many times, going all the way back to 2013. Even recently this year, you could draw it a little bit higher up, and still not that much damage. You've had some of these trends break. It traded here, down 4.5%. Remember this accelerated trend, broke here, held there. Remember this head and shoulders top, held in well. This was that false breakout way back when, held in well. So all in all, this trend has been intact for multiple years, and everyone's kind of scared that once it breaks, it could, get crazy, and at some point, it might. Okay, but it's going to have to break below and stay below the 50-day for more than a few sessions. It's going to have the 8 and 21-day curl down. It's going to have to actually not hold the 100-day for more than a session, and we'll see that happen. So anyway, probably spent too much time on that, but I'm just talking on why traders are a little risk averse right now, but there's tactics to do using the red dog reversal tactic and trying to figure it out. This morning we went in the morning call. I'm like, what are some things that look strong that can go green? What are some things that might be shorts? Unfortunately, the two stocks that looked kind of weak were Netflix and Tesla, but they opened below the pivots and then came off it. So you had to be short overnight to make your money there. So now if we look at Tesla, it's not much to do there. It's below the 50-day. It's below the 8 and 21-day. This was your last pretty much pivot pattern that broke below and then broke below this, and then you had to be short overnight. If you shorted it on the open, you probably were frustrated. And now, I don't think there's anything so great about this. I guess people might be watching this small asymmetrical triangle. Then at some point, if it wanted to bounce back above, if today was a low of the market, that's what I would watch for that. Netflix probably looks similar, where actually looks a tiny bit better. This stock broke the same day Tesla did, after it was showing erratic behavior up here. Couldn't break out there, closed through the 8-day, and then boom, here was your bear flag. This seems like another bear flag, but this also, if the market's done going down, which I'm not sure it is, I'll figure it out. This will break to the upside because people don't like being short this. So that'll be something we'll watch tomorrow. On the stronger side, you had Facebook and Twitter. Facebook was down 50 cents, Twitter was down 40 cents. They went green, they pushed higher, and there was good tactical trade if you weren't in them overnight. I was in them overnight, traded around it, still in them. Still not a heck of a lot of momentum, but overall this Facebook, closed really, I think closed at all-time highs, above the 8 and 21 day, and still trending higher and looks real good. Twitter doesn't look as strong, but we'll see what happens. It still held the trend line that we drew from here, okay, and it still has a tight pattern that at some point, if it trades above 52.5 with some authority, it can go. It's above the 8 and 21 days, so it's in the game. I think where most traders in the virtual trading floor made their money was in Mobileye. I talked about the new issue section. There, first G Pro, wow. Thank God, we can't get it located in my firm, otherwise there might be a pain trade. Here is when it was a calculated long. Here's when we listed it as a calculated long in the regular all access note. And then look at this stretch. You know what? I know there's a lot of people on TV that that bash the Momo Bros and G Pro, the valuation, but all I know is people blow up if you short a stock that rides the 8-day, that has a small float, a heavy short interest with the new technology. Okay, that's what happens. When you short something with an opinion. If you don't have ink, some people short it with ink and they don't have to burn through money, and some people, I think you saw in the news a hedge fund might have blown up trying to short this thing. But anyway, technically it looks great, right? Broke out above a nice 2 months consolidation, boom, consolidated, went sideways, let the 8-day catch up, went again, let the 8-day catch up, and there you go. So looking good. Mobileye went from red to green, not quite as strong, but very good looking chart as well. This is when it broke above this small little descending channel, okay, right way down here. This is where you're in the car and someone's close to you, it kind of shakes to show you that someone's in your blind spot. So I'm sure this could be adapted over many time frames, and boom, held the 21 day. So not as strong as G Pro. That's why it went to the 21 day and didn't make new highs as quick, because G Pro held the 8-day. But all in all, nice little move today. Closed on the highs. All-time highs is not too far away. I would say at some point it probably takes that out. I am long some, and closed well in a weak tape. BABA I got stopped out of. I will revisit. It happens. BABA. Still needs time. It's just still doing some price discovery. What do we know? All you know is this is your after post-IPO low. Traded through 89, where this I got stopped out somewhere in here. I'm not exactly sure. And you still have a downtrend. At some point, next time it closes over 90, I'll probably buy it again, or maybe over above here. But for now, I'm not going to sit in it and wait and drift around. So I'll take my loss and move on. It's not ready yet. Same way with Loco. I know I tried it a few times. It too, has a nice pattern, okay, but doesn't seem like it's ready yet. But it's I would keep it on the radar. On a high volume move above 36 and change, perhaps it gets it going, back to the highs here. Consolidation, maybe it's getting in tight hands. We'll see. It's not a, it's not going to be like a GoPro Christmas, but maybe you go for lunch there here and there. Anyway, it looks decent. McDonald's came on the radar earlier today. It looked like a great breakout candidate. Ryan, who's on the site, who's been on our site multiple years, comes back here and there. You should look at what he types, because technically he's really good. I'm still talking, so you've come back to me. It just sometimes something's set up and then you get a little lady luck, like activist talk or whatever, and then it goes. But I want to show you something about McDonald's. All right, I want to show you this pattern here. Okay, This, okay, downtrend from 104 all the way down to where everyone and their grandmother, puked it out. What happened here? Look at this. This is a red dog reversal. Traded below this low here of 90.96. Came back above it. That low there was 90.50. So 40-cent risk for a $2 move. But more important than this just engulfed. So if you got stopped out here saying, oh my goodness, everyone's saying McDonald's going to 50, let me get out. Or if you shorted there, you just got trapped. So now the next thing you want to do is, what kind of commitment do you have to this? Does it hold the top third? Does it hold half? Does it go sideways? Is this the top third? Yes. Is it still the top third? Yes. Is it still? Yes. Going sideways. So right now, you're like, ooh, not only did it hold the top third, it went a little bit higher. So now maybe you start, drawing a little bit of a downtrend like that, or maybe even a cross trend like this, and then, fast forward, boom. Okay, and then it traded above this 95 actually, and came a little bit off as a 200-day. First time you hit it is usually resistance. But all in all, if you were short, this king and queens formation, when one bar quickly engulfs the next, gets a change of direction in the cards as long as it holds the top third or the top half, and this drifted even higher going into it. So just trying to show you something here. And so if you were in McDonald's and you got a little added boost because of the activist talk above 95, you know what they say, I think, luck is when, what's luck? When preparation meets opportunity, when opportunity meets preparation. So if you were in it from the reversal, in it there, and all of a sudden, boom, you were prepared, you were in it for the right reasons, and something happened that, gave you a little bit of a happy meal. Anyway, what else is going on here? Banks. Let's see what's Bank of America doing. Still looks fair. Actually, Bank of America, out of all the banks, is holding the 8-day. So put that in mind when, if the banks decide to go again, you do have a nice pattern here. Remember the commitment to them settling above the 8-day. So if you want to be long, it maybe be long versus this. This is 1680-ish. Look at something like Citigroup. Citigroup came back all the way to the 21-day, so it's weaker. Look at something like Morgan. Came all the way back through the 21-day and is holding, I guess, bigger support, but turned today, so maybe that gets going. But Bank of America is showing relative strength here. So see what happens next. What else were people talking about? SPLK. Tight, right? Tight. Maybe put this on the radar for tomorrow. All the moving averages are converging. Didn't give much back of this igniting bar, so see what the story is there. What's data doing? Also engulfed, looks decent. Some of the, the IBBs still look good, right? Look at that, holding in there above the 8 and 21-day. I know it feels like it's hard to trust because this is supposed to be the speculative spot, but as long as it stays above 270, I think you could stay with it. Stock like Guild is still hanging around, holding in there. It's wedging at some point. If it happens intraday, maybe you get another trade there above 109.01. And if you look at Celgene, someone talked about today, this was a potent down day right here. So if this got you out of your stock, okay, it happens. Then the next day it had an inside day, took back more than a half or a third, so now it's back to repairing. So maybe you have another inside day, maybe it just goes, who knows, but all in all, if you've been staying in this thing, it still acts okay. Just got to be able to handle the BIOS. Some guys were talking about this little NQ at the end of the day. Nice little potent bar, massive, decent volume, so put some volume in. And it looks okay. I would said, if you're going to do it, take some options, because this is some people talking about a 0, and some people are saying it's going to be a 12. So when there's a fight like that, I'd rather see you take options, because risk is premium paid. So anyway, all in all, could have been worse. Headlines were there. The Bears had their chance. Maybe they're trying to give the Bulls a false sense of security. Let us hang out here a few days and then blindside whoever's long again. We shall see. But all in all, if you just listen to the action, you do have some strong stocks that are holding higher. We are now back around the 50-day again in the S&P. You had a red dog reversal you could have used as a tactical long and sold, or you could have held a third and booked 2/3, and they can't take the money away from you if you booked it. And that's what you got to keep doing until we get a little bit more clarity. September will be behind us. October, first week tends to be a little wishy-washy also. We shall see. And then earnings season starts, and we'll get to see the report cards that Wall Street wants or not. Anyway, have a good night. See you in the morning.